It's been said that you were a big fan of the consumer health business as sort of a way to offset some of the risks involved with pharmaceuticals. So the people are wondering whether you changed your view or whether the facts changed for the outlook for the industry. What makes this, what caused this change of heart, if you will?
Well, good morning, and thanks very much for having me on this landmark day for GSK, when we're announcing a deal that strengthens two business and creates significant value for shareholders. Actually, there's no change of heart here at all. I've been absolutely consistent since I took this job and laid out our priorities 18 months ago, that we quite like the broader construct of the business with pharma, vaccines and consumer healthcare. But there are always conditions to that, access to sufficient capital for each business, and also that the board would be pragmatic about the structure. And this opportunity is truly a unique one in an all-equity deal to create the world's leading over-the-counter drugs company, a leading consumer healthcare company with significant value creation for shareholders. But it also allows us to strengthen on our number one priority, our pharma pipeline, by the incremental cash flows over the next few years, and then gives visibility with this pathway to eventual separation after we've substantially delivered on the integration and continue to make progress as we expect in our pharma pipeline, thereby creating two focused UK-based global companies. One, a pharma and vaccines company based on the science of immunology, genetics and new technologies. And then one, this new global leader in consumer healthcare in this joint venture that we've brought together with Pfizer, a partner we know well because of our joint venture also in the HIV business.
Previously, did it make sense for the cash generation of the more, I don't know if I call it more stable business in consumer health, that helped fund some of the drug development efforts? Do you feel more confident in the being able to predict what happens in the pharmaceutical development side of things than and I know vaccines, that's a little bit more stable than that might take away some of the risk in developing. Yeah, go ahead.
That's exactly the right point. So, we have today three businesses: consumer healthcare, pharma, and vaccines. We've been working very hard under new leadership. I appointed new heads of commercial and a new head of R&D in pharma since I came on board, and we have a lot of data reading out on that pipeline, including not least from our recently announced proposed acquisition of Tesaro in oncology just a few weeks ago. And we do like the stability of cash flow from both the consumer and the vaccines business, which is in part why we are announcing that we expect the separation to be within 3 years. But we do want to take some time to do that, in part because we've done it before. We know how to integrate joint ventures. We did it previously with Novartis. And we don't want the consumer business to be distracted around separation. We want them focused on a successful integration and delivery of operating performance. But also, we do like the cash flows in this near-term period as we invest strongly in our pipeline in the next wave of growth. But your point on vaccines is critical. The new company for GSK that will be focused on pharma and vaccines is going to be, as we are today, the world leader in vaccines. And this is a business that I think is a bit under-inspected. We have tremendous growth. We just recently launched very successfully Shingrix and new shingles vaccines. Remember, 1 in 3 of us will tend to suffer from shingles, and this has had a tremendous start in the US and has great growth prospects internationally over the next few years for the company. And vaccines don't suffer from the same kind of patent cliff, and they also have very high barriers to entry as pharma does. So we do see that as a considerable cash flow contributor. But don't forget, in our pharma business, we're also today world leaders in respiratory. We have a big and growing HIV business with an exciting pipeline as well that's under development. So we do think at the moment, as we've pointed out today, that a separation within that 3-year period, but certainly not immediately, would be optimum and set us up for 2 stronger businesses, very importantly with the right capital structures, because that's what the separation also allows for, to invest in their future growth.
Emma, do you see this as specific to your company, or do you think this is going to be the beginning of a trend, which is to say that for so long the industry has been connected, consumer funding, or at least smoothing out the higher risk part of the pharma business, and whether we're going to now see your competitors and rivals also say to themselves, you know what, actually, we're going to put the stable part of the business over here, the consumer part, maybe a lower margin business, but people know what it is, and then we're going to have this riskier but potentially higher margin business on this other end?
Well, I think if you look across the industry, you probably see two groups. You will have seen, though, several large, I suppose what you call pharma companies that had consumer divisions deciding to move away from them. So, I mean, that's what Novartis did, which was our first joint venture we successfully integrated, and now indeed Pfizer have done the same. But there are others who have been consolidators of this business for the reasons that you outlined. I think in our case, we've very clearly been a consolidator, but now this new consumer business is going to have such significant scale. And, it is really important that we free it to have its own capital structure and its own prioritization of investments in its own future growth. So now is the time for us. But you'll probably still continue to see across the industry people taking those two views.
Good morning, Emma. This is Ken Langone. How are you today? Emma.
Good morning. I'm great.
If you take one half of this deal, Pfizer, go back and look over the last 20 years at the number of deals that have been done, the number of acquisitions of consumer products. I think there's a right for certain skepticism here about the continual moving around of parts. This is rational at this point, and that's rational at that point. The one thing you should certainly be able to have some measure of is in doing consolidation. Are you going to be able to yank cost out to begin with? That's one thing. The other thing is, very frankly, this amalgamation of research effort has certainly not demonstrated any great breakthroughs. You look at what was once little companies, Genentech and Amgen, and look at how they've grown dramatically. You look at, frankly, as I look at this whole landscape, this is great for Wall Street because I'm sure they're all around this deal and they're going to get paid big fees. You'll eventually, I assume, announce it. But I think the drug companies, and I'm partial because I've been a major investor in Lilly for many, many years, and I'm a very happy one right now. But I think that all this moving around of parts, the last 10 or 15 or 20 years, you made a few years ago, Pfizer bought a whole collection of consumer products companies. And now you're going in the other direction. I'm sorry, but I think there needs to be more clarity here about what's going to be the benefit for the owners.
Let me be extremely clear on the benefit for GSK shareholders. I can't speak for Pfizer's history, but I will speak for GSK, the company I have the privilege of leading today. Right. You referred to the question of value creation in the combination of this joint venture. We've announced today £500 million worth of synergies that we expect to bring by bringing these two companies together. Mm-hmm. So there is a significant value creation of that, reduction of duplication. But also we are truly creating a world leader in this industry. We will have 7.5% market share of the over-the-counter drugs business. We will be, and the number 2 is around 4. We will be number 1 in pain relief, number 1 in respiratory, number 1 in vitamins, minerals and supplements, a leader in over-the-counter skin health, in gastro health, and also in therapeutic oral care with brands like Sensodyne, many things that are probably in your bathrooms at home. And importantly, we'll be a top 1 or 2 player in 10 of the 15 biggest markets in the world, including, by the way, the US and China. So we believe we are bringing together a powerful new world leader, by the way, bringing the best of both companies. And again, we've done this before. Our margin in 2015 in the consumer healthcare business was 11%. We're now forecasting an outlook by 2022 of the mid to high 20s. And of course, at the moment of separation, at the point at which we will have substantially completed this integration, we're obviously then unlocking quite a lot of value in a new listed or demerged and listed consumer healthcare business. But just as importantly is the solution we bring for our pharma and vaccines business, because we're able to use near-term those cash flows to keep investing in our pharma pipeline. And then at the moment of separation, because the consumer business can carry a lot more leverage, a much bigger consumer business can carry leverage that will be able to pay down quickly. And we've been public, we're expecting that to be 3.5 to 4 times at the moment of separation. We then have a very delevered pharma business that can keep investing inorganically and organically in its growth and continuing distribution to shareholders.
Emma, I wonder if this is a commentary on a hope that maybe we're getting close to taking a lot of the basic science that I used to think about Glaxo. You had rational drug design and you put combinatorial chemistry together and you had sequencing the entire genome and you got all these unbelievable techniques, but I haven't seen the quantum increase in unbelievable therapeutics for Alzheimer's or diabetes or cancer or whatever you want to talk about. It seems like the progress has been tough. I don't want to call it a golden age of this coming, because I think we've had a golden age ever since penicillin, if you think about it. I mean, what we're able to do now. But is there some quantum move coming in the next 5 or 10 years where a lot of these things, we're finally going to start making progress on these things? I'm counting on you. Ken's counting on you. We're
Absolutely.
All,
well,
we're counting the most.
yeah, you're the one counting. You're the one counting. We're all counting, actually, because that's not for whom the bell tolls.
Well, listen, it's a great point, because we've been talking a lot about the financial structures to this deal, the benefit to shareholders. But let's remember, the reason why a company like GSK should exist and should endure is because of the impact we have on people all over the world and their health, to help them do more, feel better, and ultimately live longer. And what we're talking about here is setting us up to create 2 companies. And one of them, the bigger one, the higher return one, is going to be focused on pharma and vaccines. Vaccines, the bigger contribution to human health since clean water in terms of prevention, which, by the way, in terms of the economics of healthcare, is absolutely critical. And then in pharma, we've just hired new leadership, since I started, both commercially to make sure our operating performance is delivering the fuel for reinvestment, but also a new, very exciting leader, Chief Scientific Officer, Dr. Hal Barron, who laid out his vision for the future of R&D, which is all about the science of immunology and combining that with the new science and technology of genetics and all of this explosion in technology opportunities that we have, because never has there been more advances in our understanding of biology and more advances in technology. And that really should create the opportunity to solve one of the biggest challenges in pharma development, which is it can take 10 years, cost billions of dollars, and still have a 95% failure rate. When we can actually genetically validate the targets we look at, we know the success rate doubles. And when you start to think of all of the opportunity, which is why so many technology companies are talking about healthcare, all the opportunity in analytics and machine learning to get more predictive about the studies and the data that we have in these big companies, I think the long-term future for this industry has got to be bright, and ultimately so that we impact people's lives.
Emma, I think I've heard this song before. I can't think of a deal like this that's ever been announced that didn't have all kinds of promise and positive benefits going forward. I guess my concern is all these moving around of parts. I think specifically of a company that was on the board of General Electric. Every deal Immelt announced was going to be the second coming of the Lord. I think, frankly, and who am I to say, I've never run a company like Pfizer, I'd probably be bad at it. But I think it's time for the pharmaceutical industry and all business to start looking at managing their business and less emphasis on these so-called strategic deals. Lilly bought an animal health business a few years ago. Now they spin it off. This is great for Wall Street, but with all due respect, your argument sounds compelling, but we'll know better after you've had time to see it happen. I said earlier,
that's always true.
I'm skeptical because we've been around this dance floor long enough to know that at the end of the day, you got to run it. And it gets down, frankly, to the kid on the bench in the laboratory that comes up with a molecule that becomes a Humira or a Lipitor or whatever you want to call it. So,
of course,
this all sounds good, but as I said, we've heard this tune before, and I think the proof of the pudding is going to be in the eating.
Well, that is always true. And we will need to demonstrate and build confidence quarter by quarter. But we've been pleased over the last 18 months of the progress we've made in our operating performance. And I would refer you to the deal we've announced today is a joint venture in consumer. And to perhaps give you the confidence that we have executed on a joint venture in exactly the same model with Novartis in our consumer business, and made significant moves in the margin with value creation for shareholders and impact for consumers around the world in terms of the growth of our market shares. And the opportunity we create here for pharma is the cash flows to invest, as you say, in our bench scientists and in the program.
Emma, thank you.
And then give us the capacity to look inorganically too.